Alright folks, buckle up because we are going to be diving into some juicy market action. Last week we had some surprises and this week is shaping up to be just as wild. So if you're here for a quick, no-nonsense breakdown of what's happening without all the fluff, you are in the right place. We are mixing up fundamentals with economic data, with technicals, and keeping it real. So let's just jump in quick and get you up to speed. Alright, part 1, reflecting on last week data. So last week was quite the roller coaster. First off, the US and retail sales came out, and if you don't know what that means, well, just think of it this way. The higher the retail sales, the more people are out there swiping the credit cards, which usually signals a healthy and confident economy. Lower the number, not so much. It's like the economy's mood tracker. This number was projected to drop by 0.2%, but instead we saw a slight increase by 0.1%. Now, you would say that's not a massive increase, and there's more to it than that. Secondly, we had the industrial production numbers out. Now, if you don't know what this means either, if it's up, industries are buzzing, cracking out products, and that's usually a good sign for the economy. Now, if it's down, it could mean things are kind of cooling off. Now, the number was expected to increase by 0.2%, but it jumped by 0.8%. So we are seeing, good action in the economy, fundamentally. Now, let's move ahead. Now, these are better than expected results, right? Despite all the seasonality trends and stuff. But again, the most important takeaway from the week was the Fed's aggressive 50 basis point cut. Now, everyone was expecting a modest cut of 25 basis point. So when the Fed did hit us by 50 basis point cut, it definitely got people talking. Is the Fed realizing they might have been slow to react and now they are trying to make up for the lost time? Well, it's kind of hard to say for sure, but what we do know is that businesses are still fundamentally strong. Also worth noting, we saw the Japanese yen carry trade make a quick recovery, and we did see the BOJ make the same statement about how they are fundamentally strong. Alright, part 2, the technical side. Now, shifting gears to the technical side, we are going to be looking at the technicals from a very, very simple lens. So, looking at this resistance line in play last week, the price broke through it. But the big question is, will it sustain this breakout? Or are we going to look at a potential rejection? The thing is that if it rejects, there's a gap in the moving averages. That price might fill pretty quick, so we do not know what to expect there. So keep an eye whether the market holds above this resistance or reverses, because that is going to signal where the next level of price action will be. So if you want to take away anything, absolute minimum anything from this video, is keep an eye on this price level. Alright, part 3, upcoming economic data. Looking ahead, we have got a lot of key data coming up this week that could really make or break the market. Again, reflecting back from the previous technical side of the price levels, this data could be the catalyst. So let's look at this. On Monday, we are looking at PMI data. On Tuesday, we are looking at the consumer confidence data. On Thursday, we have jobless claims, Powell's speech, GDP growth rate data, and on Friday, we are going to be ending the week with the core PCE data. These are all big pieces of the puzzle, from manufacturing strength to consumer sentiment and inflationary pressure. All of the forecasts for now looks good, like manufacturing index is expected to increase, consumer confidence looks solid, and GDP growth is forecasted to double from last time. But let me tell you this, if there is any kind of negative shock, like rising inflation, worse than expected jobless claims, or GDP growth rate missing its target, the market could start believing that the Fed's aggressive rate cuts are a way of playing catch up. This week might not be the perfect storm, but it's definitely going to be pivotal, so hold on. Alright, part 4, spotlight on gold. Now, something interesting I noticed is the gold ETF. It's been quietly making some moves over the past few days. Well, with the rate cuts happening and the crucial data coming up, people seem to be seeking safer exposures, maybe, or inflation hedging instruments like gold, right? Is this a flight to safety? Maybe, but it's worth keeping an eye on how gold performs in response to the next round of data. Part 5. Now, I didn't really think I wanted to do this part about it, but I was like, why not? And this is a potential opportunity. Lastly, I spotted what I think might be a decent opportunity here. I'm not going to name any companies, but with the current buying data points that we can see in the market, it looks like non-energy material companies, according to me, might be getting overlooked. Now, am I saying you should buy them? No. Am I saying the prices will go up right now? Not necessarily. Remember, trading is about taking risks in the face of uncertainty. So keep that in mind and do your own research about this if you do find this interesting, and let me know about it. And I say that because Powell seems to be the face of uncertainty lately. And the funny thing is that if you do Google Powell lately, you will see two Powells. And I'm sad to say it is not Jerome Powell as a first result. It is Mr. another Powell, whose first name I forget, or maybe last name, I'm not sure. But yeah, one of the Powells is popular to be shaking the market, and another Powell is popular for shaking. Alright, that's it for today's quick recap and preview in under 7 minutes. So if you found this video helpful, let me know if you like this format as well. If you'd like me to add anything in particular or explain more in depth, let me know in the comments. And thanks for watching, and I'll catch you in the next one.